Africa, the second largest continent on Earth. 54 separate countries, making up 20% of the world's landmass. 60% of the world's uncultivated arable land. 30% of known mineral resources, and 15% of the world's population. 1.1 billion people currently live in Africa, a number that's set to double by 2050. And they're on the move, arriving in cities at a rate of 23 million a year. Africa already has the world's youngest population, and in 30 years' time, the number of 15 to 24-year-olds will double today's levels. Changing demographics, population growth, and rapid urbanization are among the biggest challenges facing the continent today. Yet with this transformation, if managed inclusively, comes opportunity. $800 billion in foreign direct investment has flowed into Africa over the last decade, surging in recent years, with African private equity returns exceeding the emerging market benchmark.
Turning this on-paper theoretical potential of markets and people into an African reality of growth and jobs demands at its heart a closer, more collaborative partnership between business and government.
The region is forecast to experience a real GDP growth rate of 4.2% over the next 5 years, well above that of Europe and North America. During the next 8 years, consumer and business spending in Africa is expected to rise by $1.6 trillion. 70% of African countries have strengthened their governance structures and systems over the last decade. And this, together with a growing suite of risk management products, is reducing the risk profile for Africa-focused investments. Private equity interest in Africa has grown rapidly over the last 25 years. Over $30 billion is managed across 200 Africa-focused funds today, with Old Mutual Alternative Investments managing around 14% of that.
Africa is 54 different countries, and in each country there's jurisdictional risk, there's political risk, there's the risk around the framework within which you're investing, the regulatory framework, the legal framework. There are currency risks in Africa, so it's critical that you are investing with partners in these different countries who are reliable and trustworthy, who know and understand the environment and are able to manage effectively within the environment that you're investing in.
Dubai and Singapore have demonstrated that accelerated economic growth follows a period of infrastructure investment. The priority now must be to prepare for Africa's population growth by focusing on infrastructure in urban areas, improving water and energy reliability, creating jobs, and promoting regional trade. Managed effectively, with the public and private sector working in tandem, this demographic shift can lead to positive, sustainable economic development. As with all great opportunities, timing is everything. And there's no question that the time to act in Africa is now.